What is going on, everybody? My name is Believes. I'm here to talk to you about a few trading indicators which I think are going to make a big difference in your trading predictions. Now, one of the biggest problems in trading is that we do things impulsively. Well, with these range indicators and with these trading indicators, you have an opportunity to have a little patience and decide for yourself when to enter a trade based on information that you're receiving real time, as opposed to just looking at the chart and saying, well, is it going up or down? Let's just decide. Before we do this, hit the subscribe button, hit the like button, make sure you leave a comment because that helps the video to trend. But all right, guys, we're going to start off and we're going to do this with SHIB. Now, most of you know I am passionate about Shiba Inu, and that makes it easier for you because you're probably watching me because of Shiba Inu. So we're going to look at the chart on Shiba, and then we will decide whether or not we're going to enter into a trade, whether we want to make this trade or not. There's three indicators that I'm going to use. The first one is called LuxAlgo Predictive Ranges. And this is it right here. There's three pieces to this, and it is a range profile. So a range profile means that there's going to be an area. Now, the first part is the point of control. That is this blue line right here. And you can see the blue line pop up several times along the way. And it's very simple for you to find out whether you're in a bullish or bearish pattern by looking at the direction of the last two point of control changes. So this point of control change went from here to here. That means that we're in a bear trend. So until this breaks and we get a movement to the upside, we are in a bearish trend. So bear that in mind when you're making trades. That probably means that you're looking for shorts and that your shorts are going to be more accurately able to be met or made. So the second piece is this value area high range. And the third is the value area low range. Now, we're going to start with the value area high. As you can see, as we entered this zone, we did dip all the way down. When we dip down, we dip to the bottom of the value area low range. Once we did that, you can see an immediate and very specific move back up into the point of control. That point of control. Now, the point of control did not exist until it was made, but this became our point of control. From that point of control, we then moved to the upside into this value area high range. Now, at this point, based off of a bearish trend, then you're going to make a short on this movement right here. And that played out all the way down to here, which, by the way, is going to be the area that you're going to want to set a take profit for. You can take your initial investment out. You can take the whole thing, whatever it is that you're looking to do. But that's the way that it played out. Now, once it hit that range, then let's zoom in here just a little bit more, get another idea about how this played out. Once it hit that range, and once we were clean, it started to break to the bottom. Now, when it breaks to the bottom and you start to see this wicking right here, then the first thing that you want to do is you want to enter a new trade, and you want to enter a trade going to the upside. The problem with this is we had already established what a range for the value area low is. So this is a bad entry position to take on if you're trying to protect capital, and that should be what you're trying to do. So turns out this was right. We moved back into the point of control, ranged around here, and then bang, came down finally and hit the value area low. Once we hit the value area low, this is when you make the decision to make a buy. You make a buy and you want to go long with this position. Now, as soon as this position was hit, we saw a big move up here. Now, this gives you an opportunity. You can sit right here. And again, you're looking at an opportunity to take your profit right here, take your original investment out, do whatever it is you need to do, and then let this thing ride its way up and see if it doesn't range its way back up to what ended up being another point of control, which was the other point of control that ranged up into another value area high. And as we saw, this was the second time we had hit the value area high. Now, what does that mean? Well, that means that it's time to do a reversal and take this party back down to the point of control. So you're going to reverse this, or you're going to go into a short after you've taken your profit on this position. Or if you took your profit on this position and it still continued to pump, it's okay to miss when this happens, by the way. It is quite all right to miss that position when you're making this play, because it doesn't always work out in your favor, and every trade is not one that you want to make. So if you didn't take profit, or if you only took a small portion and you let the rest ride, and then you got a nice big profit off of this, then you want to liquidate that at the value area high, take it back down into what ended up being your point of control all over again. Now, we're in this range right now, and it is playing out. At the moment, SHIB is on a dip. Now, if SHIB comes to the point of control, we're still looking at, by the way, bearish sentiment. So when it gets into this point of control, we're going to have a decision to make. Is it going up or is it going down? Well, when it makes a flash of which direction it's going to go, then we'll have an idea of what we want to do for a setup. So what you do at this point is, this is not where you enter the trade. This is not your prime spot to enter a trade. This is when you find out whether or not you're going to do it from here or up here, or you're going to do it from down here or even lower down here. So that's what this indicator is doing, and that's that's going to help you make some decisions about your proper investment. But that's not the only tool. Now that we have that one, we're going to pull up the next piece of this. I'm going to restore this pane. This is an RSI MTF histogram. What it tells you is money flow, whether the money flow is positive and or negative in these ranges, so that you can make a better prediction on which direction it was going to go. So coming back over here, as we mentioned, we came down to the low, and then we came right back up, ended up at the point of control, but we also ended up moving up a little bit further. Now, when you make the decision whether to take your profit right here or to wait for this to happen, then you come down here and you can look and see, am I in the green? Is my money flow moving to the upside? And what we saw in this regard is that the money flow, when we hit this point, was continuing to move to the upside. So we've just added another very easy layer to what we're doing right here. And now we can make a decision that we want to hold on to this for a little bit longer. So we hold on to it for a little bit longer right here, which happens to be right here, money flow, as you see right here. And we'll zoom in on it just a little bit here. Money flow right there went from green, as you can see, this green line went into red immediately. So on this is our take profit area if we're using the histogram in addition to what we're using already. Now, that allows us to also know price is coming down. So this is the place where we're going to enter a short. Now, we want to do not use risky leverage, or it's all your choice, by the way. But remember that your liquidation point, if it's over 89.15 and maybe even a percentage or two up above this, then chances are at some point you're going to get up into this range here, and you might end up getting liquidated, because it could break out and it could turn bullish at any right. So when you're making this play, you're entering this short in this range with enough value here to make sure that you don't get liquidated if it continues to move up to the top of this range. Now, you're entering this short with the idea that you're coming down into this position right here. And like I said before, on the regular LuxAlgo predictive range here, we would have taken profit right here and let it ride down just a little bit. But if you come down here, you can see that we were still in the red, but we had also gone down here into this area, which means that a reversal was probably coming in imminently. So we just want to ride this down until we start seeing some buyback and we start to see that wick. When we start to see that wick at the bottom, that's when we want to exit the trade. So because we have this histogram, we're not taking our profit here. We're allowing ourselves to range just a little bit further and make a better decision about this by adding in this indicator at the bottom. So that gives us an opportunity right here. Now, this does mean that we are being told right here is a green buy zone. Do we want to buy right here? Well, this is a tough one, because the answer to this should be no. This is not the range you want to enter. And why is that? Because this is your point of control, and it can go either way in your point of control. So what's going up here could easily have gone up for just a second and then gone way back down. Now, take that a few hours later, and what we saw was that movement here in range, and then that's exactly what happened. We dipped down here. Now, what happened when we dipped down here? You see the red, the red, the red, and then boom, here we are. We hit our area, and this is the zone that we just created that's telling us it's time to buy. So we buy in at this level and we use our leverage position to get back up into this range a few hours later. We get to this range a few hours later. What do we see? We still see that our histogram is all greened up. So what are we doing? We're riding it up right here. And where do we get? We take our profit probably right about here because we start to see this thing turn red. And as we see it turn red, that's when we want to go ahead and reverse the position. Now, it did fake us out and it did move up here, but that's fine. From here to here, just imagine you're doing, let's call it 10x leverage. With 10x leverage going into this position, you are at 10.79%, which means that if you entered at the right spots, you're looking at 107% profit. Now, you're not always going to be exactly right, but if you can score 100% profit on something, that's a point where you can decide, am I going to take the profit or I'm going to take my initial investment out and then just let the remaining amount ride? Now, if you let the remaining amount ride, you get a few more percentage points off of it. If you took the whole thing, then you're waiting now for the next move. You've gotten your red over here, but we turned back to green. So we got green all the way up until we got into this next range. Now you decide from this range, are we going up the rest of the way or are we going down? Well, our histogram kind of dies out right here across this and it's not moving upwards, showing money flow keep continuing to come in, and then it turns red. So now we're entering a short position right here and we're riding it all the way down to this position. Now, when we get to this position, what happens? It flips back to green. So we take our profit again and then it rides up, but it doesn't go all the way up. So now we're just sitting in range. So what we've been doing at this point is just kind of sitting in range. This is not a buy area for us. So we're not entering into any SHIB trades as of right now because we're being smart. Now, with these being out of the way, and these are making it very, very easy for you to figure out what your positions are. Again, to summarize here, this is your point of control. This is your value area high. This is your value area low. You're going long when it comes into this range with enough leverage that once you see the wicking start, that you understand that it's going back up most probably. Now, it does break down and it does break up and it does, breaks both ways. So you will be put in a situation where you will need to set stop losses, and we'll talk about stop losses at a different spot. But if we take if we set ourselves for a long right here, knowing this, we also understand that it could continue to fall. So you have to decide what your risk is, and you have to set yourself a stop loss so that you don't liquidate the entire thing. Now, we're going to enter the third piece, and this is going to be the AI moving average. And you can pull this up with AI moving average exponential is what I'm using right now. And what I'm doing is I'm combining the 50 and the 200 EMAs to create these lines. Now, when you get these lines, you're going to get the 50, which is going to be, I think it's blue, and you're going to get the 200, which I think is going to be green. I switch those to red and green on here so that when these flip back and forth, you will know that it's either bullish or bearish. And these are simple indicators. Now they are expanded, even though I called them simple. These are indicators that will allow you to know, and it's very, very simple here. This is a 50 EMA and a 200 EMA. When they converge, like they're about to do here, it looks like they might be doing very soon. If this comes up into here, and this one comes up over here, and the green goes up above, you are in a bullish indicator. Now, if you hit a bullish indicator, what do you expect? Well, then you expect your value area range. You're expecting this to move up here and probably come back into this range right here. One of the things that you'll notice is that this thing always seems to move up and down from one area to another area, and it uses the point of control every single time. Trading is very simple if you keep it simple. So when we look at the green flopping over, as we see a transition right here to green, it goes green. And then what do we see? We see price increases. We see prices continue to increase. And then what happens when it crosses over low? Then we start to see prices come down. So then we have to ask ourselves, what is going to happen next? We're making a guess. We're making a concerted effort here to figure out what the best position is. And what it looks like right now is that they are coming together for a convergence. However, Let's also not miss that the wick right here is starting to point downward. So we're looking for this to cross over and we'll know that it's bullish. When it's bullish, we're looking for longs and we're looking to take good positions in these ranges down here. When we're seeing it in the shorts, now, it doesn't mean you can't make another long, by the way. It doesn't mean, but it also means that your risk on a long is greater in this bearish sentiment than it is otherwise. So as you come down here and you see this, you look for your crossovers. You want bullish momentum indicators, and you want to buy in these areas right here. And then you just want to, sometimes you might just want to let it ride. Just let it keep going, let it keep going. As this one broke out of range and continued up, this is a bullish pattern, bullish, bullish. And then all of a sudden we get over here, we're in a bullish momentum indicator, and then it crashes back down, and now we're back bearish. So I think it's very simple. As long as you are looking at the signs, as long as you're paying attention to it along the way, this is going to make a big deal and difference for you in your trading. This is exactly what I'm using right now. If you are interested in trading, I use MEXC down below. There is a link for a sign up. Use any one of the descriptions down below. Fairdesk, MEXC, Gate.io, any one of those is a fair trading platform that I'm partnered with. Thank you so much for tuning in. It's not financial advice. My name's Bleaves. I'm always right. Thank you so much, and we'll talk to you again very, very soon.